Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to the pre-Christmas edition of 7 Investing Now. My name, of course, is Daniel Brooks Klein. My friends call me Dan. Steve Simonton, you can call me Dan. How was your weekend? And welcome to 7 Investing Now.
Hey, Dan, my weekend was great. We drove around and looked at Christmas lights around town, and it was fantastic last night.
So you have young kids. Share their ages if you're willing to.
6, 10, and soon to be 13. So that's an adventure.
Are they in earshot? Can they hear this while we talk?
No, unless they're watching the live stream, which I highly doubt.
What are their big Christmas gifts this year? Or what were their big requests? I'm not going to reveal whether you got them or not.
Goodness sakes. They didn't really request anything, but we sort of got them everything. So it's like that strange year where they just mention in passing that they want something. We're like, yoink, shove it in the shopping cart. But yeah, so
we got my 16-year-old a couple of things that sort of just play to the boredom of being stuck in the house. But we've decided that on June 25th, we're going to be throwing a Chris Monica New Year's party. So anybody who's in the South Florida area, we're going to rent out our clubhouse at our complex, assuming everything is safe, and just invite everybody we know to like a welcome back to the world Chris Monica New Year's party. We are hoping everyone is vaccinated by then. Feel free to share your comments in the queue here. Steve, we were going to be joined by Max Chatsko today, so we're going to play our best Max later in the show. But before we do that, we're going to talk our top story today. And our top story is one we've been following for a long time. Today's the big day. Tesla has been added to the S&P 500. Let me share a few facts here. It's going to become a 1.6.9% weight. That's the 5th largest on the entire index. Yep. It'll be the 6th biggest company in the large cap benchmark when you count both class shares of Alphabet. Steve, what literally happens today? Like, they're going out and buying a whole bunch of Tesla, right?
Yeah, yes and no. So one of the things I guess that has been happening over the last several weeks, because they announced back in November that this would be happening. So investors, including passive fund managers and active managers that use the S&P 500 as a benchmark, have pushed it up in advance of its entrance as a member of the S&P 500. So it was up 6% on Friday as it was preparing to enter the index. And I think since it was announced back in November, it's up about 70%. So Tesla's up over 700%. I'm not sure what that, where it is now, because it's fallen about 5% today since it was added, but basically to levels not seen since Thursday. So nothing, not a big deal there for long-term investors, I guess, who are intent on owning Tesla. So I guess one of the things we need to really keep in mind is recall it actually wasn't added to the index as some people speculated it would be back in September. Part of that was likely due to the S&P 500's profitability rules. The companies that are part of the index have turned in a GAAP profit in the past 4 quarters, and Tesla actually did that 2 quarters ago, extended that streak with its most recent quarter, and then they finally said, okay, we're adding it now. And I think it was just uncertainty surrounding the profits that potentially prevented it from being added a couple of months ago.
Steve, a fair amount of their profits aren't from operations. They're for things like environmental credits and other things like that. Does that worry you? Like, to me, if your operations aren't profitable, you're kind of not profitable. It's like remember when Sears would sell off Die Hard and be like, we're profitable this quarter. It's like, you're not. You sold a kidney to get 10 grand. You can't go sell another one next month. It doesn't work that way. What are your thoughts here?
There's a lot of mathematical acrobatics that people are trying to do to kind of throw cold water on Tesla's profitability. I mean, it's there, and the source of it for now, I wouldn't be too concerned, because, I mean, you could make the same argument for a company like Amazon, which scarcely turned a profit for its first 2 decades as a publicly traded company. So it's really not a big concern to me, because we're looking at a long-term oriented business. And one with much greater aspirations than just simply being only a car manufacturer. And that's the big mistake I think people make when they try and value Tesla, at least relative to its long-term potential, is ignoring its longer-term aspirations, not only in the electric vehicle market, but its kind of robo taxi plans and its energy plans and energy storage and battery technology and such.
Don't forget boxer shorts and flamethrowers, also big businesses for Tesla.
Yeah.
And I'll say they don't teach mathematics like they used to. That is not something my son has had to take. But shares are up, and if you bought Tesla at the beginning of this year, you'd be up 730%. That is not typical. That is not expectable. That is not something you could plan for. Even all the people who recommended Tesla, nobody got on TV was like, you know what I think is going to happen with Tesla? It's going to be up 730% this year.
Yeah.
Company's market cap is $658 billion. Steve, is that realistic? Is that sustainable?
That is a loaded question. Potentially, I wouldn't count out a nice little correction because it's run up so incredibly far. I mean, looking at for perspective, I bought my first shares of Tesla and wrote about it at the time, not this past June, but the June before. So about a year and a half ago now. Split adjusted $40 a share, I think is where that early position was. So that's been like a 15 bagger in a year and a half, which, to be clear, is not normal. And I wrote about it and said, I think this has tremendous potential, but I did not expect a 15 bagger in 18 months. It's crazy. And so I wouldn't count out, a nice little pullback that might give people a chance to enter at a lower price. But I also wouldn't bet against it. And that's part of the reason that you see short interest in Tesla stock at an all-time low right now, is because bearish investors have had to simply abandon their positions because it's just an absurd bet to try and count, to try and actually bet against Tesla and Elon Musk, and the momentum that the stock has at this stage is bold, we'll say.
Yeah, I'm a Tesla owl. I am watching it. I am neither bearish nor bullish. I think the company is likely going to do well. I think they might do something like buy Volkswagen, but I do think it's a pretty big leap to go to vehicle maker to becoming, a battery company, to all these other things they want to be. They haven't proven that out to me.
Yeah.
I'd also like to see Elon hire a world-class chief operating officer. And I know that's very unlikely, but this whole startup ethos of like, we're going to pull all-nighters and sleep on the floor, and like, that's not sustainable. You can't run forever. And I'd like to see them learn how to operate. It's not a well-run company. And they get the job done. That's very different. I used to run a factory, and if you got a special order, I might sit down to the guys and say, okay, if we work all night and fulfill this order, here's what we can do. We're buying ourselves 6 more months of, we're not going to close. And sometimes the guys would be like, okay, let's do that. We'd work all night, but there's a reason for that. It's a once. Tesla is kind of operating that way all the time. Sure. Steve, if you didn't own shares, would you buy shares now?
I'm not adding personally. I would really, really love a 20 or 30% pullback before I added to it. But it's one of those where I'm not adding, but I'm also not betting against it, because that just seems insane. So.
We would love your comments, no matter where you're watching this. In theory, if you comment, we can see it. For example, Doris and Renee Carell said, good morning, guys. And we say good morning back.
Good morning.
We appreciate everybody watching. We know it's Christmas week. We know probably not the normal audience is watching live. We're not doing a show Wednesday. We are not doing a show on Friday. We're going to be back next week, Monday and Wednesday. We're going to do year end. We're going to do best of and sort of talk about our favorite, biggest stories of the year. Everyone on the team is going to be involved at some point. There might be a Santa costume involved. That was going to happen today. It might happen on Monday. Not me. I, of course, will dress as Baby New Year's, but Max was thinking about a Santa costume. That could happen. Steve, before we get to what we're watching, this is, of course, brought to you by 7 Investing. We are both lead advisors at 7 Investing. We sell a subscription service for $17 a month or $170 a year. You get our 7 best stock picks. Each of us makes one pick, our highest conviction pick, and we give you a write-up. We give you a 15 to 20-minute call where everyone else on the team can ask questions and push back. You get a ton of information about each pick. But Steve, it's going to be Christmas. Hanukkah has passed. There's all sorts of holidays I'm probably forgetting. How do you give someone a gift subscription to 7 Investing? I know most people probably have 10 people they want to give a gift subscription to. It's not that easy. How do they do it?
If you do want to gift a subscription, just send us a note, info@7investing.com. send us an email. I will personally help you get that set up. It only takes a couple of minutes. It's very easy, and we've had a pretty fair number of people do that already so far. So pretty easy process. I will let you know exactly how to do it. Just send us an email, info@7investing.com. I will answer that personally.
Now it is, of course, time for what we're watching. We were supposed to be joined by Max Chatsko today. Max having some not that big a deal family issues that took him off the show today. So we are more than happy to fill in for Max, because Max brought up a story, and Steve, this one could be a game changer. The headline is, do we really need 2 doses of coronavirus vaccines? What was it Max was going to tell us about that?
Well, there's not a whole lot of data right now, but it appears that a single dose of both the BioNTech, that's the one that's in collaboration with Pfizer, and the Moderna vaccines are over 90% effective at preventing infections. That kind of creates the possibility that we can prioritize everyone receiving a single dose first, then doling out booster shots to everybody in late 2021. It remains to be seen, I guess, without a lot of data to support it, whether they will be able to actually implement this. And we also have, some governmental strife that's obvious that might prevent, a semblance of an organized national plan to actually implement this. So we will see how this turns out. But not all the vaccines require 2 doses anyway, so it might not be that big of a stretch. But it could mean if we're able to pull something like this off, give everybody a single dose followed by a booster later next year, it could open up the economy by summer, maybe schools by next fall.
Yeah, I actually think Max is being pessimistic. The forecast was we were going to be open by summer in terms of vaccines available for everyone who wants one by April, May under the old system. What this should allow is, with what we're expecting, let's say by February, we have the data to prove that 1 dose. And remember, the 25 million doses that are out there that are being given, all of those people have had for a month. We'll have some data from those people. So we can check on this, prove it, and hopefully it's true. If it's true, twice as many people can be vaccinated. Add in the Johnson & Johnson vaccine, which is very likely to apply for approval in January. Right. And we're really looking at, 1, the Johnson & Johnson vaccine can be in regular refrigeration. So we're going to have an array of solutions. There's also a 4th one that I'm forgetting, maybe AstraZeneca, that's also on the fast track. And people ask, well, is this typical? And I'll say, I've been trying to get into the Johnson & Johnson study. I did all the pre-test. They might be done with people in my area, but they tested that first for what happens if you take 1 dose and what happens if you take half a dose. The part of the study I was going to be in was, what if you take a full dose and then 57 days later take a second dose? So it's not atypical that they test these vaccines all different sorts of ways. And if we can get everyone vaccinated and it's 90% and then do those booster shots later on, we're going to be able to open the economy. This is really good news that is being really unreported. So if you're looking for news you're not getting elsewhere, that is here on 7 Investing Now. Steve, as we move on here, I want to grab a couple of comments. Have you ever driven a Tesla? Tucker asks.
I haven't, but I will say that I've seen a massive increase in the number of them around my town. So we're up in northwest Montana. That's saying something if we're seeing Teslas all over the place.
I'm in West Palm Beach, so it's not crazy to see nice cars, but I'm shocked at how many Tesla superchargers there are and how many Teslas you see. Now, obviously, there's more superchargers than there are Teslas because I've never seen them full, but they do seem to be building that out really well. But Steve, for what you're watching, you want to talk about the other big news of the day.
Oh, yes.
Congress is passing a stimulus, and there's some good stuff in it, and there's some maybe bad stuff in it. What are your thoughts here?
Well, yesterday evening, that's kind of the other big news that we can't ignore right now, is that Congress finally came to terms on a bipartisan stimulus package. It's a $900 billion deal that includes, not limited to, but includes $600 payments for most adults, $600 per child. So another direct payment round. Actually, this morning, I believe they were saying that people could start seeing that money in their bank accounts by as early as next week. So they're trying to roll it out really fast. Has $284 billion in new PPP loans for small businesses, $300 federal unemployment supplement that should temporarily keep in place pandemic programs that expanded eligibility for unemployment insurance. Also has $30 billion in for procurement and distribution of vaccines related to what we were just talking about, has some relief for hospitals, some money for schools and colleges, expanding Pell Grants, $45 billion for transportation. About a third of that's going to go to airlines, which obviously need the help right now. But the other thing,
let me jump in. That's conditional on the airlines bringing back laid off workers. So
yes,
just so everyone doesn't get outraged, that money is much like the original tranche of money, where it has to go to employees or they have to give it back. So, I don't want airlines getting money. Do not invest in airlines because of this. Those were bad investments before this. They're bad investments now. I like Southwest, and if you truly believe they're going to recover, 6 months from now, they'll be a decent price. There is no reason to run in now where there's just a lot of dumb money going into airlines and other travel stocks.
Yeah, sorry. We could go off on tangential thinking there. Plenty, talking about how Buffett ditched his airline investments back in May, talking about how, they took all that money and basically that leaves shareholders, it's got to come back out of profits, the money they're receiving, because they have to pay it back. And it's going to come back. It makes shareholders, 15 billion at a time, less wealthy. So anyway, the other thing I think that we should ignore is that on the Democrat side of the aisle, Biden is saying that this is only the beginning. He's calling it sort of a down payment for what's to come. He and the rest of the Democrats believe that more stimulus is needed, and they will pursue another deal after he takes office in January. So expect to see that in a couple of months. We're going to see that dominating headlines again.
Steve, I'm pessimistic there. Even if Georgia goes, both of them to the Democrats, and I don't expect that to happen, that makes it 50-50 in the Senate. I'm not 100% sure there's rock solid support for even more federal debt, even more money going out. I think there'll be some targeted stimulus. There'll be some obvious industries that need help. I think there's some big things missing here. Yes, there's the small business stuff. There should be much more directly for restaurant and bars. There should be much more for non-corporate owned travel and other things like that. So, Steve, I'm excited about this. The markets are a little bit down today. Does that mean anything? Or is this just kind of like it was baked in anyway, so there's a bit of an exhale?
I think it's a combination of that. Tesla's addition, the pullback, we have the sixth largest company now in the S&P 500 fallen a fair bit. And this is a market cap weighted index. I wouldn't really read too much into the day-to-day movements of the market anyway. But I don't think this is necessarily a sell the news event. And it was widely expected to happen. And, I remember a couple of weeks ago talking about this is what I'm watching, and saying essentially this should happen. It's good, I think, that it happens sooner than later, because I do think that this was needed in order to stave off further complications when it comes to small business failures and individuals. The little guy struggling really needed this help. So
hopefully the government and the banks can figure out how to give it out so it doesn't end up being an endless array of stories about how like big businesses got the money, and like you find out that like Tom Brady's company got like 30 million, and what was it, like the Cheesecake Factory. And I'm actually fine with businesses as long as it goes to employees. Before we go to the home stretch, Sam Bailey in the booth, I'd like to take the last comment that just came in. Lilienthal Jeff says, do you think the bank buybacks will make a significant difference for those stocks in 2021? No, I don't. I really think that buybacks are one of those things that they're nice. It's it props up the stock a little, but the bank stocks are going to do well because the ones that are in the market, there's a ton of activity there. Anybody in the mortgage space, rates are low, but they can pick and choose. There is an enormous amount of demand. And it's kind of a good time to be a bank, with the exception of rates being very, very low. Steve, any thoughts to add there?
Yeah, and I think that question's coming in response to the Fed announcing that they would allow the resumption of buybacks. And I think like JP Morgan, for example, just within minutes of that announcement, this morning announced that a new share repurchase program of 30 billion, which is a pretty big, it's large, but yeah, I do think they will benefit more from broader kind of market tailwinds and the current environment than necessarily buybacks. But we shouldn't necessarily throw too much cold water on the topic of buybacks and their impact on long-term returns, because sustained over years, they can have a significant positive impact on shareholder returns. So not a bad thing for them, obviously, but a huge impact, maybe necessarily not.
We're going to head into the home stretch. Tucker, stick around. After the home stretch, we're going to take your question. But let's talk about New Year's resolutions. I'm going to go first. The question is, do you make any? And I do. I try to do something manageable in my life. So I did a couple of things. Right before New Year's, a couple weeks ago, I bought an Apple Watch. And my goal is every day to fill all 3 of those rings. So I found myself doing things like taking a brisk walk at 10:30 at night so I can get like 12 more minutes of exercise.
Mhm.
I actually think it's made a major difference in terms of accountability, because when you're doing that, when you're seeing literally how many activity calories you're getting, it kind of makes you at Starbucks go like, do I get the 40-calorie coffee I don't like as much, or the 230-calorie coffee that's much better? So I've done that. But the real big thing I'm going to do, my New Year's resolution this year, is I'm going to examine my purchases more. Steve, you know I'm an electronics guy.
Yeah.
I own about 45 different batteries, like the things you plug your phone into. And I have 3 different ones on order right now. Now, some of that is needed. I live in a place that has hurricanes. You need to have a big store of power because you might lose power for 4 or 5 days. It's not, but I definitely have too many. I have 4 different coffee makers in my shed at our other house. And I recently just bought a new coffee maker, and that was compounded by the fact that somehow they accidentally sent me 2. So I am awash in stuff. I am eager for the pandemic to be over, to be able to have a yard sale, or frankly, just let my neighbors come and take what they want. So I'm going to try to put like a 24-hour, 48-hour hold on anything I impulse buy in the electronic space in 2021. Because I probably would have spent about $1,000 less. And that $1,000 invested this year might have been worth, I don't know, $1,400-$1,500. Steve, do you make any New Year's resolutions?
No, I don't. I try, I guess, in my mind, it is an interesting opportunity to psychologically re-examine ways that you could potentially better yourself or improve your situation or those around you, perhaps. But I also try and recognize that that's something I can do on an ongoing basis throughout the year. So I'm looking forward to some semblance of normalcy in 2021, time with my family, fostering 7 investing. Those are the things I'll do in 2021. But the turn of the year wouldn't have changed that regardless.
Steve, two things. If you want pain, ask your friends and family how you might better yourself in the new year. That's not going to go well. And I got to be honest, I love my wife and son. You know what I want in 2021? Less time with family. And I don't mean that. I mean, normally I travel maybe somewhere between 6 and 10 days out of the month. While I'm traveling, like, TV shows build up in the DVR that my wife and I want to watch together. Conversation topics arise because we didn't experience every single thing together. Now it's very, very stagnant. And there are a lot of nights where it's like, oh, there's things I want to watch. There's things she wants to watch. There's nothing left we want to watch together. I think everyone could benefit from a little, time with other people, time apart. I'm sure you and your wife would like a couple of nights, where the kids are at the grandparents. So those things are coming. One person's asking in the queue, can we comment on Tesla and the S&P 500? That's how we open the show. So this show, 7 Investing Now, replays everywhere. You can find it on our YouTube channel. We'd love for you to subscribe to our YouTube channel. That's good for us in terms of opening things up. But of course, it's on Twitter. It's on Facebook. It is soon coming to LinkedIn. That is a lengthy process, but working on it. Steve, what's the top financial resolution you would suggest people make in 2021?
If we're making resolutions, I'll repeat something that's perhaps oft repeated on this show. Think longer term. Ditch day trading. Don't think about short term returns. Don't try and make a trade that's going to make you money in 2 days. It's virtually impossible to consistently do, and that's why we are long term investors at 7 Investing. So take a look at your time frames, extend them.
Steve, as you know, I'm writing a book that we're going to give out free to anyone who wants it on long-term investing. And the subhead actually contains the words ditch day trading. Not sure if that's going to be in the final. That book is well on its way. Contributions from all of the 7 Investing team. That is going to be free somewhere in probably the second quarter, I would guess, maybe the first quarter of 2021. So something to look forward to. Here's the best financial advice I would give you. Cut where it doesn't hurt. You always have those people that write those articles. I hated these articles. This is how much money you could save on not buying your morning latte. What if your morning latte is the joy of your day? What if you savor every sip and it's the best part, and you're spending $30 a day in a lunch you don't care about? Like, you really need to look at what brings you joy, what's important. I love the ritual of going to a coffee place, not so much now during the pandemic, but going to a coffee place, sitting there, talking to people, doing a little work, whatever it is. Even this morning with the mask on, it's the first time I picked up inside a Starbucks because the drive-through line was like 80 cars. So I parked and went in, and it was very well done. That's really important to me. So I'm not going to cut there. There's other money I spend that after you did it, you're like, why did I do that? Like, why did I just spend, $220 on dinner when we could have just gone to like someplace we like for $80? Like, so I'm a really big fan of like, you might have to make painful cuts. Your budget might be, you might be spending more than you have, but a lot of us, if we just don't buy the things we know we're not going to use, like I stopped buying Madden every year. I'd buy Madden every year. I'd play it for like 15 minutes and be like, yeah, I'm too old for this. Not going to do that. Like, make those little cuts. Steve, we're going to take a couple of comments here before we move on to our finisher. Tucker says, which industry do you guys see doing better in the next 5 years? SaaS, genomic, fintech, e-commerce, and he asks, or real estate. I think there's going to be winners in all of these spaces. I don't pick. Yeah. Look, I follow retail. You follow SaaS. I have a real estate pick in my portfolio that members would be aware of. So it's one of those things where I don't invest this way. I look for really good companies, and the sector is really, really secondary.
Yeah, and I would say, in answer to Tucker's question, all of the above. And that's why we have recommendations on our scorecard that cover all of those, actually. So SaaS, genomic, fintech, e-commerce, real estate, they are all on our scorecard. We have a little something for everybody, and we have filters that allow you to break them down. So 7 Investing subscribers would know, if they look at our recommendations, we believe that selectively chosen, you can find winners in all those spaces over the next 5 years.
Yeah, and one of the cool things we do here at 7 Investing is we do a monthly call where we all sit down and we have to present our stock, and everyone can ask questions. That went live for members for our December picks today. So if you go to the 7 Investing website as a member, if you have trouble finding it out, please hit us up at 7 Investing on Twitter. We could share the members only link. It's not going to work if you're not a member. JE says, of the book I was discussing, sounds like good reading for a cruise. I'm hoping on some cruises next year to have some members join us to do some stock market talks. Honestly, I don't know, read like a Stephen King book or a John Grisham book on a cruise. Like, I'm all in favor of people reading our books, but I don't think it's exactly going to be pleasure reading. Of course, you can also buy my book Worst Ideas Ever on Amazon, and they don't send me any money, but it's a funny book. So feel free to do that. We're going to take one more question. Rob T says, any suggestions on where to keep up with the latest genomics news? It's hard to find info. For example, what in the world is causing the shares of CRISPR and PAC-B to spike? Where you can find the latest genomics news is here on 7 Investing Now. We have 2 people, Max Chatsko, Manisha Samy. They cover those industries. My guess is they could tell you those answers, but it's more important to get their long-term perspective on those stocks, on those businesses. Steve, I would argue we have the best 1-2 genomics punch of any investing service out there.
No, they're incredible. Oh, and if you have questions about anything, they're and world class. I'm not tag them on Twitter, Manisha Samy and Max Chatsko. You can go to our 7 Investing handle and find theirs. Follow them; they're fantastic. If you have questions, we love talking shop with our subscribers, and any one of them would attest to that. So tag us; we're happy to talk to you.
That is at 7 Investing. Hit us up there. Send an email to info@7investing.com. We will happily answer those questions. And a specific question like that is something we would absolutely answer in our once a month members only Zoom calls. Happy to do that. But Sam Bailey, let's hit our finisher. First and only show for the week. Which stock will have the strongest performance in 2021 by percentage gain? About 8% of you said Zoom. 21.8% said Tesla. 64.2% said Teladoc, and 6.1% said Netflix. I actually would argue Netflix is overwhelmingly the one I would pick. Not that I don't believe in all the others. Teladoc,
Yeah.
which is a company I really like, there's no barrier for other companies, other medical groups starting similar products, and many of them have. I know that through my health insurance, I have a Teladoc-like experience, but it's not Teladoc. Steve, what would your answer be on this particular question?
I'd vote Teladoc. In this case, I do think I think that impending merger is great news and really promising. Tesla, like I said earlier, I'm not selling it. I'm not adding to my position. I continue to own Netflix, and they've been a big winner over the long term. For me, and I think Netflix will continue to do just fine. Zoom's a little bit more interesting. It should be interesting to see what happens to Zoom stock in particular, not necessarily the business, as we kind of have that reopening play. But I do think we might see a little bit of downward pressure for Zoom as the broader economy starts to reopen and some of the work from home temporary trends begin to abate.
I think for Zoom, it's going to be perception more than reality. I don't think any company is going to cut its Zoom subscription because they're going to be more open to, hey, I don't feel well, I have a soccer game with my kid or whatever it is, work from home. Obviously, some companies moving to more of a work from home model. That being said, I like Zoom's prospects in 5 years. I like them in 10 years. I don't like them necessarily for the next few years. And probably there are better places I'd put my money. Again, it's a great business. They're going to grow, but they're not going to grow at the pace they have been when in-person meetings become possible. I am very much looking forward to our first in-person 7 Investing Team Summit. I kind of want to know if, like, most of you have legs. Like, I'm not even 100% sure. I know it's been a few years since we've been in the same room, Steve.
It's been a few years, I think, since I've shook your hand last, and it's killing me. I'm a big handshaker hugger guy. Everybody knows that, and this year is hurt me for that. So
yeah, this has been awful. So that's it for 7 Investing Now. If you have questions for us, you can reach out to info@7investing.com. We usually get to these very quickly. Remember, it's Christmas week. There's going to be a little bit more family time. It might take Steve a little bit longer to get back to us. And of course, you can reach us at 7 Investing on Twitter. We are not doing a Wednesday show. We are not doing a Friday show. We will be back Monday with our 2-part Monday and Wednesday best of the year. We're going to talk about the biggest stories of the year. We're going to do more resolution talk, all sorts of fun stuff. There might be a gift exchange. Who knows? For Steve Symington, I am Dan Klein. Merry Christmas. We'll see you Monday.